All right, we'll get rid of that ugly thing, and then we will begin. I know it's been a couple of weeks since I've made a video. I kind of wanted to let all the information that I've shown you so far kind of seep into your brain. So it was kind of on purpose that I waited before I made another video. But that time has elapsed, and now I'm going to show you how to use the signals in coordination with things like the yellow zone and things like the Woody's pivots and things like the pressure zone. Now, first of all, there's going to be people that are going to come to this video and they're not going to have an introduction to what it is that I'm showing you. So I'm just going to give you a real quick rundown of the anatomy of these candles. Now, first and foremost, this is the S&P 500 futures for March 2020. And this is an 8-range chart. Now, what that means is each one of these candles is 8 ticks, or 2 points, or 2 handles. So none of this on this entire chart is based on time. It is all based on price. And that gives you a couple of advantages. Number one, you get very uniform candle structure. Okay, you don't have all kinds of wiggles and squirms all over the place. All these candles are very uniform. I'm going to cough. Excuse me. The second thing is that because this is based on price, it could take 1 minute to form one of these candles. It could take 30 seconds to form one of these candles. It could take 8 minutes to form one of these candles. So it gives you an idea of the activity level that's going on in the market. If it takes you 8 minutes to form one candle, it's slow. You got a slow market, and sometimes slow markets, though, are about ready to make a move. There's some churning going on. There's a fight. So it also allows you to kind of get a gauge as to what is going on. Because remember, all of this is a story of psychology. Okay? Because the markets are fear and greed. Those are the two emotions that you have involved here. So it's telling you a story the entire time it's trading, and it's up to you to listen to that story. So with that being out of the way, let me give you the anatomy of these candles. Now, right here, this 2803, this 2541, this 9107, this 6852. That is the volume that has gone off inside this candle. So you had 6,852 contracts, 9,107, 2,541. You get the picture. 13,176. And volume can also come into the picture, but we're not going to get into that. It's a little more complicated and a lot more discretionary. So those white numbers, the big white numbers, are just the volume. The numbers here, like the inside the box, the negative 986, positive 317, positive 525, negative 819. That is called the COT, or commitment of traders. Now, don't confuse this with the commitment of traders that the CFTC puts out every week. This is completely different. And the COT is a measure of pressure. So it's showing you that negative 986, you had some decent downward pressure there. Not a whole lot of downward pressure there, but then it started to pick up steam again. And here you had 317 on the COT and 525 on the COT. So the numbers that are inside those boxes are a measure of pressure. All right? And then you have the delta, which is the number that is not inside the box. Negative 119, negative 655, positive 86, positive 84, negative 377. The delta is nothing more than taking all the buying and subtracting from the selling, or taking all the selling and subtracting from the buying. So you're either going to get a negative delta or you're going to get a positive delta. And that just gives you an idea of what went on inside that candle. Okay? And that's all that is. Now, the blue, these blue stripes, that is called the point of control in each one of these candles. And all the point of control is where the majority of the volume went off inside that candle. Okay? I know it sounds elementary, but is extremely important. The point of control is extremely, extremely important. So that is the anatomy of what you're going to have to know with what I'm going to show you here today. I mean, there's other stuff going on here. You've got order imbalances, and you've got, all the contracts that went off at what price on the bid or on the offer. But we're not even going to get into that. So now that I've given you the anatomy of the candle, let me zoom this out a little bit more so we can get more in here. So you had a buy right here with what is called the hybrid model. And you'll notice this is a green candle. See the green outline? And the point of control is within 3 ticks from the low. That is a buy for the hybrid. 3. Rule of 3. It can be here, it can be here, or it can be here. Notice also we're right at a yellow zone. So that adds credence to that signal. All right? Now, let me give you an example. Here is a hybrid. That is a sell signal because the point of control is within 3 ticks of the high. So a sell on the hybrid, you want 3 ticks from the high. A buy, you want 3 ticks from the low. And like I said, it can be in position 3, it can be in position 2, or it can be in position 1. It doesn't matter. That is going to give you a trigger. Here, this is marked with a red diamond. This is a sell, but this is a sell based on the negative COT and the positive delta. That's a divergence. Both of those should agree. This is positive, this is negative, and we always follow the pressure, not the delta. So this is a sell signal. Now, some of you who have been with me for a little while might say, yeah, but Matt, you were telling me that the point of control on a divergence signal needs to be outside of the body of the candle. It does. Unless you've got another tool that you're working with, which is what? The yellow zone. We've got a yellow zone right there. And there's a video on the yellow zones. I don't just put these yellow zones on here. They are made by Mr. Market based upon fast market conditions and order imbalances. Okay, that's what makes a yellow zone. It's not just lines that I slap up there. So here we have another buy, but this time we came down to a pressure zone, and we have a positive commitment of traders and a negative delta, and we had the point of control outside the candle body. You're licking your chops on that one. We've got everything except for this point of control being in the lower 3. Okay, so this is a juicy one right here. So then we have a sell up here at the yellow zone. Once again, this is all going to be based on the pressure zone, the yellow zone, and these Woody's pivots. And you're only going to take either a hybrid or a divergence at a point where there's either a yellow zone, a pressure zone, or a Woody's pivot. So then we have a hybrid cell right here with the point of control being 3 down from the high. All right. Then we're right at a yellow zone, and we have a divergence on top of that. So you can see we got some action there. And we also have one here. See if you can figure that one out. Hopefully you can, now that I've showed you a couple of these. And then we have a back-to-back. We have a sell here, but immediately reverted to a buy based on this point of control being within 3 ticks of the low. And we're in the pressure zone. Okay? Moving along. We have a sell here. This one is based on the S1, which is a Woody's pivot. If you haven't used the Woody's pivots or you've never used the Woody's pivots, I highly suggest you look into them. They're frickin' awesome. So this is at this pink dotted, this hybrid is right at the Woody's pivot. I mean, right to the tick. And then again, another one that's right to the tick. Okay? So this is incorporating zones, the yellow zones, the Woody's pivots, or the pressure zones when you get a signal, right? So here we've got a yellow zone with a divergence, negative 443 and positive 1329. You start to pick up what I'm throwing down here, how that works. Now, here we have a buy signal on the hybrid, and it would have worked out well. But what don't we have? Well, we're not at a yellow zone, we're not at a pivot, and we're not at a pressure zone. No, we let it go. I want you to be selective. Okay? Because if you start to take every single signal that's coming your way, it's going to cloud your judgment after a period of time. And you're going to start to get cocky. You don't want to get cocky. Okay, once again, we have another pivot cell here. We're right at the Woody's pivot. And we have a hybrid cell, which is point of control is within 3 ticks from the high. And we have another one right stinking here. And then we get another hybrid cell right at this yellow zone. So you know something's going on there, and it's coming on strong. So here we are at S2 on the Woody's pivots, and we get a buy signal with the hybrid, and then we get a sell signal right afterwards, and we really don't go anywhere until we get another hybrid right here, right at the Woody's pivot. And not only at the Woody's pivot, but you're right in that pressure zone. So you're getting some really good juice there. That's going to help you rock and roll. And then we have a sell signal right here off the hybrid, 3 ticks off the high. The point of control is 3 ticks within 3 ticks of the high. And we're in a yellow zone. Boom. You picking up what I'm throwing down here? And if you're having a hard time picking this stuff up that I'm showing you, I have plenty of other videos on my YouTube page that will get more in depth on it. But what I really want to touch on here is to use these yellow zones, use these pressure zones, and use these pivots to only take signals off the hybrid or the divergence when they're at that point. Okay, it's going to make your life a lot simpler. You're not going to be crying because you missed a trade. You're just going to be selective, selective, selective. And it's going to pay dividends for you. I told you this was going to be a long video. All right, ladies and germs. Until we meet again. Later.